Good evening, everyone. Um, this is just a market overview here of what we can hopefully anticipate for this week. Got a lot of earnings coming out. We're coming off of a pretty steep decline from Friday's news, so a lot of anticipations this week. Just a quick disclaimer: anything you see in this video is not financial advice. This is just a overview for your educational purposes. All right. So first thing we always come at is our weekly candle on SPY. So what we can see is our weekly candle is slightly lower than the previous week's candle, but we are coming off of the downtrend that we had on the previous video. I mentioned that we had a larger downtrend. It was more clear on the daily, but on the weekly you can also see it. There was a downtrend here. We finally broke above it the week prior, and this week we're somewhat testing the lower bounds of that down channel. But as we mentioned last week, coming off of new highs here, we can expect a little bit of a pullback to retest our 600 level I mentioned, and I would say around 603 ish, our previous highs. There's a pivot point here at 603 where price moved up and down during this consolidation area here. With the news being the way it was on Friday, of course, the rejection that we had was way deeper than it actually ended up being. But the fact that our weekly candle did remain green just gives you more of a soft bearish tone rather than a hard rejection with a red candle. So just bear that in mind. Doesn't necessarily mean we're bullish or bearish. It's just not the cleanest bear candle on a weekly chart. Alright, then we head over to the daily. Nothing too much with the daily candle. It's more of just a pullback, deep pullback, I would say. This is our Monday. We had a Monday uptrend. Lower, higher lows, and lower highs, right? So there was a bit of an uptrend that broke just based off of the news on Friday. I will go ahead and put on my lines now, and you'll start to see what I mean by that. So higher highs, higher lows, higher lows, higher lows, day after day on the week following this drop down that we had. I'm gonna go ahead and mute you. Sorry about that. Let me know if you have any questions. I'll unmute you. So yes, so we had higher lows, higher lows, higher lows, and then eventually, with the news, we were breaking down underneath here. Still above that 600 level that we mentioned on the weekly. So there's still some hope. If we start failing under 600, that's when I would start to look to see if any bearish sentiment is coming in strongly as far as volume or anything like that. So I'll try to reassess during the week to see if we can assess how price action occurred on Monday and Tuesday. Give it a few days to settle down after this news. So essentially, you really want to see if we can hold over 600 for now. That's just going to be your key thing here. Nothing else too much to mention here on the daily. Let's see. Let's go to the hourly. On the hourly, I posted this screen capture a little bit earlier today, but on our SPY chart here for our hourly, there was a bit of an uptrend for a while after this steep downtrend with the deep seek news. That's why we had this huge downtrend. If you're not aware, Deep Seek is an AI platform, basically competing with OpenAI, and the reason for this huge drop is essentially the U.S. is pumping like $6 billion into AI development and OpenAI, and this small company in China managed to basically catch up to our level because from what we've understood for a while now is that a lot of the rights to AI chips, like NVIDIA chips, and any semiconductors that they run on, we own the rights to use them and not to sell it overseas to any other country to, I guess, maintain the amount of information that's being put out or controlled. So essentially, China managed to have a competing AI platform using like 10% of the funds that we do. So that's why you see a huge drop here. It just shows that they're more advanced than we anticipated. That's essentially what this drop here is, and it costs much less to achieve much more than than what we're putting out right now for the cost. So that's really where this downtrend happened here. Aside from that, we did have this 1 hour up channel here that's happening. One thing with trend lines, you do want to see multiple touches. That shows you that it is in fact the trend line. Um, just 2 touches is needed for a trend line. However, more than one, as you see, 1, 2, 3, 4, 5, 6 touches are even better confirmation. So we had a nice up channel here happening. Um, with the negative news, we can assume that there was going to be a bit of a pullback, but us closing underneath the channel just shows us that that current trend that we had for the week, it has been broken, but holding up over the 600 level here, our pivotal point 599.58 as well, is just an indicator that our weekly trend has not turned bearish yet. As far as our pathing last week, there was not too much we could have anticipated, especially with our drop down here and then our sell off at the end of the week. So not there wasn't too much as far as pathing that we can identify. Only thing we can say for this week is to see if we can have somewhat of a pullback, and if we can hold over the 600 558 pivotal level, see if there's some support here, possibly have a retest of this channel, and then further rejects and consolidation on the down towards the downside. That's obviously the bearish outcome. We want to head to a more bullish outcome. I would like to see us, even if we retest here and reject, build some type of support under our 600 level before climbing upwards a little bit, and retesting, I guess, the middle end of our range here. I don't see a blue sky breakout unless there's some news happening. I'll go ahead and pull up the 30-minute chart to kind of give you an idea what I mean. Ignore the thousand and millions of trend lines. Essentially, what I meant by the uptrend occurring around this area here is what we can see possibly playing out. It's not there yet, still has a ways to go, but we could see sort of a head and shoulders pattern playing out with the head here, our shoulders being this area. So that's just something to look out for any uptrend. If we start closing above the 605 level, then I would be more positively bullish. But once again, the head for a head and shoulders does not necessarily need to be at the equal height. We can have a head here, we can have a head here, right, with sloping resistance as our neckline. Neckline doesn't always have to act as a horizontal neckline. So this is something to be on the lookout. Even if we do have some possible momentum, I would look to see if we have any rejections around the 605.75 level. to act as the right shoulder for our head and shoulders, right? Let's move on to QQQ here. Start off with the weekly. All right. So for QQQ on the weekly, we've obviously we're in a nice massive uptrend here, and I mentioned last week that unlike SPY, QQQ does give opportunity for a lower high to be set. So I wouldn't go so far to say that we're remaining bullish, but um, let's do this right here. So we're not necessarily fully bearish, right? So we have a nice solid uptrend here with our previous highs being up here. We can easily have a lower high playing out here before another breakout. With our news being so negative as far as the tariffs, that usually affects our tech a lot more. So we have less risk sentiment in the market. So you'll start to see when I go over the XLK sector of SPY, you'll see how it plays a crucial part in determining whether we can hold up this positive momentum that we have here. What I would look for, at least on the weekly, before we get to the daily, this is not, it's showing 500, is not necessarily 500. Let's call it 503. I want to see if we can create a lower high under 503. I would say that our trend is starting to break here on the weekly. It's not as clean as I drew it there. So a break of 503, and we start closing under there, then we can say that our trend has been broken for the time being. So I would look to see if QQQ could start breaking under 503, or at least closing under 503, before I have any bearish sentiment on QQQ. Okay, and then let's zoom in here as best as we can. Alright, and then as far as the daily candle, obviously strong rejection, news-based pullback here. With the similar things happening as SPY, right? We have lower highs, lower highs, lower highs, lower highs. The pullback was fairly deep, but we still held over, I would say, the mid-range of our little box here. So the midpoint would probably be around our weak pivotal point. So that just adds to my point where I mentioned that it's not inherently completely out of the gates for tech. With 519 here being our weak pivotal point, essentially if we start closing underneath this on a weekly, or at the towards the end of the week, or even during the intraday, but I would really essentially like to see it close underneath 519 for me to say that we are now in more of a bearish trend. Because similar to SPY, like I mentioned, it has a higher high here, higher low, sorry, here, and we're still on the trend line here. So we didn't necessarily break underneath the trend line yet. So 519 is definitely going to be a key level to be watching out for. As far as the rest of the levels and all these lines that you see on the chart, I will post them at the end of the live, as well as any news-based influences that we'll have on the market. I also posted in our market overview channel as well. And one more thing I wanted to mention for Q before we move on is all of our SMAs here on the daily chart. I primarily only use moving averages on the daily chart, just as a glimpse of the daily trend for for SPY, QQQ, or IWM. So our blue line here is our 50 SMA. So it's our average price within 50 days, right? And the same thing with 25. It's slightly different than the EMAs because EMAs is more, I would say, an estimated calculation of where price genuinely is and the momentum in the ticker. So the SMA gives you a cleaner understanding of where price is and what the significance of those levels are. Not to discount the EMAs, just an idea of why I use it specifically only on the daily, because I want to see where price has been and not what price could be or what the momentum is trying to suggest. So one thing that I noticed here is that all of our EMAs are starting to close in. Um, we had all of our EMAs shooting through the roof for a while here. Even during this consolidation, our 50 was still lagging on the way up. Now what we see is everything starting to converge here, which essentially means that there's two things that we must do at this point, right? Either price will begin to settle here, develop a very strong pivotal point in the center of our range here, or um, these EMAs will turn to a resistance, and this will change the trend from a bullish trend to a bearish trend, especially if we're underneath the 50 and starting to head towards the 200. Not to say that 482 is a possibility. I mean, it's not out of the question, but it's not something that I'm looking for the rest of the week. I just would like to see if we can start closing under a 50 SMA here before we have any sentiment for bearishness. As you can see, our 20 and our 5 meet up just at the 518-ish level. So it would be very interesting to see if we can either find support here or find resistance. And then I might get rid of these SMAs now. Pull up our lines. So for QQQ, fairly simple. Our strong pivotal points here are going to be your key sentiment in the market here. So 519 here, if we start breaking below it, retesting it and breaking below it, then I would say that we are bearish. So I would look for 519 or even 520 failures before you go quick to short. As far as longs, for longs, we are at a pivotal point here, 521.89. So there is a possibility of a bit of a bounce here, retesting our previous support that's acting as a resistance on multiple times. So we will see if we can either have a pullback here before we go further down, or bit of a consolidation before a breakout over our strong pivotal point here at 526. So if you start seeing price break above 526, then I would say QQQ is now continuing its bull trend. Simple as that. Price under 519 bearish, over 526. I believe it's 526 flat. Bullish essentially. We have a lot of news. Well, not necessarily news, but the whole thing with the tariffs happening right now. It's going to take a little bit to settle. There's so many questions, back and forth with different countries. So you can expect some volatility. On top of that, we have some big key players having earnings this week. So there's a lot that can just sway the market. So that's why I'm going a little bit easier on as far as pathing wise. The significance this week is definitely our levels, our volume levels, our areas of significance, which I will post at the end. That's the key thing this week, especially with IWM. IWM, we are in this. I'm not even gonna go to the weekly. There's nothing much going on. We're in a little bit of a box here. Finally above on the positive side of the box, right? The over 224. Let's go 225 to be give a round number. IWM loves round numbers, so we're in the upper bounds of it. What I will say is we have not left what we were where we were last week, which is our 227 level. So 227 price is just acting as a very solid pivotal point here. We have breakovers, retest, breakover, break under, consolidate, validating this area, and then of course the gap up before we retested, went right back up, and then starting to fail with this news. So our 227 level here is just going to be the biggest key player in IWM for now. You can always look at our resistances and our supports along the way, but essentially over 227 bullish, under 227 bearish. It's simple as that. There's not too much going on with IWM until we start leaving this little box that we're in. Need to start seeing some new, either breaking out for over 230 here, or if we start to fail and attempt to fill this gap below. For now, it's just consolidation in this range. For our sectors here, XLK. This is our tech sector, and our tech sector in just our tech sector of SPY. Sorry, which is a very key component in SPY's momentum. As of late, it hasn't been as much of a mover as the rest of the sectors. But I just wanted to mention that we do want to see some positive momentums on here. Here are all the supports. I'll leave it up there for a second so you guys can kind of just take a look at the supports here. We definitely do not want to see any failures under 222 here. If I start seeing failures under 222 and QQQ is starting to fail under 219, I would suggest that our tech sector's bull trend has started to slow down. So I would just look for some supports here. This is our tech sector. You do want to see this doing well. Our XLK, once again, you do want to see it doing well. These are our key support levels here. Any previous support acts as resistance currently, but it is, I believe, a third of SPY. So if this does well, the rest of SPY will also do well. Then let's go to our XLF. Another thing with XLF, our financial sector SPY, it has been doing very, very, very well lately. Just a straight shot up. These are going to be your JP Morgan, your Bank of America, a lot of your major banks. Your major banks. This is also a very key player in SPY. So it's just worth mentioning. As far as our levels here, there's nothing too insane as far as levels, but we are in a previous high here where we had strong rejections. We are trying to support off that area here, so I would like to see if we actually support off this level or start to have some failures. We can assume a little bit of a pullback towards 50.85 would still remain healthy. So I would just take a look at our XLF to see if we can maintain this trend here. I pulled up the fibs just to kind of give you an idea of really where price needs to start supporting at on any pullbacks before we can switch to bearish. So of course our 50% here is around our 49.50 level. Start breaking underneath that, I would lean more bearish, but as of now, a pullback towards our 50.85 is safe, and we want to see if we can have some positive momentum on the upside to keep boosting up our SPY here, because that's what's been last couple weeks. XLF has been carrying SPY quite a bit, so it's just Very important to see if our XLF and our XLK here starts to see some strong failures. That's when you know there's a little bit less confidence in our risk on sectors, our high growth sectors, and then you can safely start to make the assumption that SPY is having somewhat of a pullback, or QQQ as well if XLF is also having some failures. So it's good to just kind of take a look at our sector, see how they're doing, and see if it can give us a glimpse at how the rest of the broad market's going to be doing. And then that's pretty much it. There's Nvidia. I do not suggest touching. We just chopped around for a week. I mentioned this sometime early in the week. Just chop. Nothing much going on here. If you must, over 227 is gonna start looking bullish, but I would look out for that 130 level if we even do decide to go up that high, as well as the supports at 113. But one I would like to see if we even have stronger failures at 116. So maybe we break underneath, retest it, and have a stronger rejection before I can confirm that we're going lower at all. But as far as that, just chop. I would keep my hands off of it for now. Similar with our Tesla here. We're just in a big box here. As you know, Tesla moves quite a bit throughout the day. You can see $10, $14, $20 moves in Tesla in a day. Anything's possible with them. They don't necessarily go with the broad market. We could all, every market could be bleeding off, and Tesla could be making new highs in the market. It's just that independent. But with our pullback at the end of the week, the whole broad market kind of had a pullback off of that. For Tesla, same thing. There's nothing too much going on, especially since we're continuing to have any strength here at the 415 level. Any breakouts, retests. We had the gap up that we had, but aside from that, it's just we're trying to validate this level, and it's just not working right now. Doesn't necessarily mean that we're inherently bearish, but I would like to see some more closures over, let's 415 with some strength. So let's say 420-ish, 426, start having some closures over there and breaking out of this box, right? This 428, 380 level, break out of this box, because any weekly contracts you take, you can't really afford to hold, as it can easily go up $20 one day, then down 20 the next day, then down 20 the next day, and then next thing you know, your contract isn't really worth much, right? So it's just worth mentioning. There's not too much, unless you have a lot of levels on Tesla and you've been playing it for a while and you're very comfortable with the movements of it. I would stay away from it for now. Apple, nothing much as well. We are in a severe downtrend. We had a little bit of a push up, but we had very strong rejections Friday on the open. Right near this line here that I drew is actually the 50% from our initial drop below. Down here, we obviously went a little bit further than that, but from our 260-ish levels to 230-ish levels, our 50% was around here. We didn't even attempt to break over that. We filled the gap on the way up, but there was no strength to keep pushing price straight through. Even the thinner structure that we had here that was on the upside and on the downside, we chopped, consolidated, and it still did not have enough confidence yet. So I would also suggest holding off on Apple for the time being. If you do want to short, I would look for 229.25 failures and see some stronger confidence over the 246 level. I know they're severely spread out, but there's not too much confidence in where the price is going right now. We just have some early morning pushes and then chop at the end of the day. Early morning pushes, chop towards the end of the day. So there's not too much going on besides retailers and getting in at the beginning of the day and getting out before 10 or 11, and the same thing happens towards the end of the day. But for now, it's been just early morning pumps and dumps. So I would stay away from that, especially if you want to do some longer dated contracts, or you want to hold out for a little bit, or you don't have necessarily the time to sit there for 30 minutes to see if your chart is doing well. I would just stay away from those for now. Just take a look at the market, see how this news affects us here with the tariffs. Just play safe and just watch out for our VIX. Let's see if I have it here. Yes, I do. Our VIX here. Quick reminder: anything over 30 is a very high VIX. I would stay away from the market. You can easily go up and down $1 in a candle. Yes, $1 in a candle with VIX that high up. As well as anything over 20, you can expect a little bit of volatility, but you do want to see our VIX below the 20. It was heading down a little bit towards the end of the week, with it having a little bit of a pump towards the end of the day. I'm sorry. But it had a huge pump earlier in the morning, high VIX. That's why we've seen those large volumes on the way up, and then the news just took us straight back down. So I would just take a look at the VIX. It's always worth noting, especially if you're in a trade and you want to know if the volatility is working against you or with you, or how far can price actually move based on this news. It's worth always looking to see if we have any spike in the VIX. And yeah, that's pretty much it for the week. Just a short little live there for you guys. If you have any questions, I'll stick around for a few minutes here, answer those questions. But I'm going to go ahead and end the live here.